Hello, good day guys. Welcome to my video today where we're going to talk about WahedInvest. This channel, if for those of you who are new, it's all about my personal finance, my journey as a 20-year-old something Malaysian, and how I plan to build my wealth with different vehicle investment here in Malaysia. And for those of you who are in Singapore or Southeast Asia, please do enjoy my video and there might be something practical for you to over here. But today, I am going to talk to you about WahedInvest, how I've personally used WahedInvest, and what I think about it when compared to Stashaway, the other robo-advisor in general. So before I start this video, I'm not in any way sponsored or paid by WahedInvest. So all these thoughts and ideas would just come directly from me. And I am also not a certified financial advisor. So just take this information as a sharing knowledge session. And hopefully we together will be able to build our wealth as the time goes on. So WahedInvest, what is it? Well, it is similar to Stashaway, except for WahedInvest, it particularly caters to those who wants to invest their money in Sharia compliant companies, right? So WahedInvest is basically a robo-advisor. All you need to start investing with WahedInvest is a minimum of 100 ringgit. There's no lock-in period, meaning you can take out your money in 2 days, in 3 days, in a week, in a year. It doesn't matter. You can take it out whenever you want. And it has very low. WahedInvest, it's now present. It's a US company, but it's present in the US and UK, and as far as I know, now here in Malaysia too. Now, they are the latest robo-advisor that has come to Malaysia. There's Stashaway, there's MyTeo, and then there's WahedInvest. So generally, you know my opinions about robo-advisor. I really love it just due to its simplicity and also its low fees. But back to WahedInvest, you can see that what they invest in is basically four different ETF and commodities. So the first is they invest in Malaysian stocks, and we'll go into deeper of what ETF they invest in. Then second, they also invest in US stocks. So those of you who want international exposure, especially US exposure, you can come into WahedInvest. Thirdly, they invest in Sukuk, and we'll see what Sukuk is. And then lastly, they invest in gold. So if you look at their performance on WahedInvest or their allocations, you can see that they have basically 6 different portfolios for you to choose from. Actually, 7. So that's the very aggressive, where you have 20% in Malaysian stocks, 65% in US, 12.5% in Sukuk, and 0% in gold, and then cash 2.5%. And as you go down the line, the type of ETF that they invest in, it's basically almost the same. The only thing that changes is just the ratio or the allocation. So you can see now from very aggressive to aggressive, it goes down to 17.5% for Malaysian stocks, right? And then 45% from 65%. And in Sukus, it will be more. And then gold, they will invest a little bit too. So as you go down the line and you look aggressive or moderately aggressive, again, now Sukuk, you can see it's higher. And then if you go to moderate, you can see Sukuk is really high. And then moderately conservative, 75% in Sukuk, 5% in gold. And then very conservative, you have almost all your cash, 90% in Sukuk, 10% in cash. And finally, if you just want a pure base gold investment, you can also use Wahed, where it invests almost 100% in Wahed. And today, what I want to bring you is the insights about these investments, right? So what are the Malaysian stocks they invest? What are the US stocks they invest? What kind of Sukuk do they invest? What kind of gold do they invest? Well, let's dive deeper. So if you look at, let's first look at the US stocks, because this is probably the most interesting for everyone, right? And mainly why I use WahedInvest too. When I click on the US stocks, you can see the main ETF that they invest in is Wahed FTSE US Shariah ETF, right? Or also ticker symbol HALAL. So if you search for Google, you just type in HLAL, you can see its performance. So when I type it in and I looked at its investment, you could see that this is basically Wahed's own ETF that they created that is listed on the Nasdaq, right? See, so you can see this is Wahed FTSE USA Sharia Compliant. So basically, when we look at this fund, what it aims to achieve is to invest in company that does not have excess debt, that does not involve itself in alcohol, firearms, impure food stocks, usurious institutions, adult entertainment, gambling, or tobacco. So generally, these companies would be a pretty profitable company, to say the least. And if we look further down into WahedInvest, right, or the ETF that they invest in for the US stock market. You could see this are the top 10 companies that Wahed invests in. So ever wanted to invest in a Apple stocks in Malaysia? Well, you could buy this ETF. It consists of 16.5% weightage in its overall portfolio. It invests in Apple. So it's a really big company, really good company that provides steady dividend. And I believe me personally that this company would continue to grow and grow and grow no matter if it's recession or downtrend, just of the sheer power and sheer influence it has in the world. So Apple stocks, APPL, you could invest in WahedInvest, and you could say you're an Apple stock owner. And if you look down the list, there's Johnson & Johnson. It's basically a healthcare company. Procter & Gamble is pretty famous here in Malaysia. It's consumer goods, right? And Intel Corporation, Microchip Services, Adobe is another really high-flying technology stocks if you look at their stock. Cisco, it's doing not too bad too. Merck and Co, another healthcare company, ExxonMobil, oil and gas, Pfizer, healthcare, and Chevron. So if you look at these portfolios, right, you can see that this company basically invests in pretty good companies, I would say. And if you look further down below the top 10, surprising thing that you will find out about this ETF is it also invests in Tesla. If I'm not mistaken, it has about 1% of its weightage in Tesla. So for those of you who goes crazy about Tesla and see Tesla stocks flying crazily high, well, this beauty about this ETF is it also invests in Tesla. So it's really a volatile, I would say quite a volatile ETF. It tries to mimic the NASDAQ, which is basically the technology stock market in the US. And so for those of you who are very not risk averse and really want to put your money where you know that you can leave it there at least for 5 to 10 years and not touch it, I would say this is a really good ETF to invest in because basically it invests in really high growth company, and with high growth basically also comes high risk, right? So you could see a little bit more about the fund's performance. So let's look at its fund's performance, right? You can see here, this is the S&P 500, which is basically the top 500 companies by market weight, right, ratio in the US. And this is basically WahedInvest's own ETF. And you can see when you track with it 1 month, the performance, WahedInvest is slightly higher. 3 months, right, is slightly higher again compared to the S&P 500. And you can see since its inception, it launched really not too long ago, just July 15, 2019. It has returned a total of 8.28%. Compare if you were to just invest in the S&P 500, it only gives a 4.82%. So I would say if you look at just 1 year horizon or 2 years, it's performing better. But it's actually really hard to tell, right? Because in the past few years, the market has always been trending up, at least the US market. So definitely it's easy to outperform. But what really matters is when recession comes, right, and downtrend, whether this ETF would still be able to outperform the S&P 500. And so the first ticker symbol is right, Halal, Wahed, FTSE USA Shariah ETF. So this is the US stock that they invest in, right? Now let's go down to the Malaysian stocks. So if you see the Malaysian stocks, you can see its ticker symbol is my ETF-MMID, right? Also short for MSCI, Malaysia Islamic Dividend. And if you look at the fun fact sheet for the ETF itself, you can see here I've pulled out the ETF. And the objective of this fund is to closely track the performance of the benchmark index MSCI Malaysia MII Islamic High Dividend Yield 10 to 40 ratio index. Well, basically it doesn't make any much sense for this, right? For all of us who are new, what does that mean? Well, let's just look further deeper into what kind of company they invest in, right? So one thing that's very important for new beginners in investing is you would always have to check its annual fee, right? You can see that this ETF, the annual fee, basically with management fee, trustee fee, and index license fee, comes up to a total of 0.5%. So this is this ETF would charge you at 0.5% every annual basis, right? So let's look at the stocks that they invest in. So these are the top 10 holdings that they invest in. So Maxis, everyone knows who Maxis is a telco company. Petronas Gas, Tenaga, QL Resources. Those of you who are interested in glove company, Hartalega Holdings, you can see it's even in there. IHH Healthcare, Gamuda, Time.com, Nestle, and Sime Darby Plantation. So overall, the top 10 stocks that they invest in or companies are pretty good companies, I would say. Very stable. These companies are companies that you won't think they would go bust in 10 years time or 20 years time. Maybe you could argue Petronas gas, but I believe that we'll still need petrol in the coming future. So these are the companies that they invest in. And if you want a simple way, instead of just buying an individual stock of Maxis and individual stocks of Tenaga National, Harta Lega, right? Why not just put your money into this ETF and it will invest for you? It only charge you a 0.5% annual fee. So if you look at the fund's performance, you can see this is a cumulative, meaning adding up all together, right? A 6 months performance, you're getting 6%. 1 year or year to date, actually, so January of 2022, right now, July, you can see it performs of 1.74%. And in a year, it was only 1.3. 3 years, it was 14%, and 5 years, 15%. So overall, pretty okay to get a 15% yield in 5 years. So basically about a 5% per year, right? Or less than 5%, 4% a year. Not that high, just because we know that there was a slight COVID-19, right, and a recession, and now the stock market is just going sideways. But you could see these their performance, their 3 years performance, and it's a pretty, I would say it's pretty stable fund. The last investment is Sukuk, right? There are a lot of Sukuk fund. So this fund that WahedInvest in is RHB Islamic Bond Fund, in which we look at it. This is basically their fund fact sheet, and you could see that what they plan or what they the objective of this fund is for investors who are risk adverse, meaning you don't really want to take a lot of risk, right? So that the stocks or the ETF, the portfolio, is not as volatile. You want an investment that complies with the principle of Sharia, right? You want to have a regular income from their investment, meaning like dividends, right? And you want a professional managed portfolio of Sukus and Islamic fixed income security. And so these is the fund performance. And you can see that this chart, for you guys who want to look a little bit more in detail, you can see that this fund, compared to its Islamic bond index that it tracks, which is this red line, it basically outperforms it. And what's important now is also to see what is its ratio, right? How much does it charge us on a annual fee percentage basis? You can see on average, it charges about 8.9%. So that's really high, right? That's really high compared for an ETF, which on average charge about 8.1 to 8.5%. This charges 8.9. But that's the fee that you pay for funds that are not as volatile, right? You could see that your fund in 1 year you get about 2.7%, in 3 years 14%, in 5 years 29%. So their fund is basically every year you get about 3%, 4%, 5%, 6%, right, 7%. So it's not very high. It's okay, and it charges you basically based on your volatility. And you can see these are the companies that they invest in. So now back to my WahedInvest and how I plan to invest it in, right? Or how I've been investing in WahedInvest. I've chosen basically the very aggressive portfolio. The whole reason being is because I want my money or most of my money to be invested in the US stocks. That's 65%. And again, if we look back at the chart, this ETF, the Halal ETF, has really high quality companies like Apple, like Johnson and Johnson, like Tesla, right? And like Merck and Co. All of this are companies that I trust that will go on 10 years from now, 20 years from now, no questions asked. And as we plot, so let me now plot these ETF against the S&P 500. You could see year to date, right? The purple is basically the Halal ETF or the Wahed ETF, and then the blue is basically the S&P 500. You could see from year to date, this Halal performance, the purple, has returned a 1.4%, whereas the S&P 500 is about break even 0%. And if you look 1 year ago, this fund provides a 11% return compared to the S&P 500 of 7%. And if you look at 2 years, even bigger difference, 18% and 15%. In 5 years, you could see 56% to 51%. So it has constantly outpaced and outrun the S&P 500. So now let's just dive deeper into WahedInvest and also how I've invested in Wahed, right? Okay, so here's WahedInvest. Now you can see that currently I have 1,663 ringgit in WahedInvest. I've started on June 3rd, so about more than a month ago. And so far, I've been dollar cost averaging. That's why you see a bump here, right? Slowly up and up. And I've been dollar cost averaging this about 200 to 500 ringgit every week into this fund. And you can see so far, I've earned 32 ringgit and 27 cents. In percentage wise, well, this is not time weighted ratio. This is basically money weighted. I've gained a 3.5%, and that's really good compared to the S&P 500. And you can see that my stocks here, I have Wahed, right? Halal. I have the Malaysian stocks, 20%, all right? I have Sukuk, RHB, Islamic Bond Fund, 12.5%, and then cash holdings, I have 41 ringgit and 98 cents. And if you look at my halal investment, so far, I got a return of 25 ringgit for this fund. So it's pretty good. And then if we look at my Malaysia, I gotten back almost a 6 ringgit return in about slightly about 2 months now of investment. And you can see that this is the app walkthrough. You have the overview, you have the position, you have the funding. You can see I've set up a recurring funding, and then you have the transaction. So very, very basic app for you. Compared to StashAway definitely has outpaced WahedInvest in terms of features on your app. But I'm just trying to diversify my portfolio and to see how Wahed performance is compared to StashAway. You could also tell that definitely I have more money invested in StashAway just because I trust the platform more. When I look at the founders, when I look at their features, when I look at their customer response time, StashAway has a better platform. But then again, WahedInvest does give me my US exposure, which I like, which I can say, hey, I am a Apple investor. Hey, I am a Tesla investor. I own a part of Tesla. So that's pretty cool to be able to say that, right? And so that's what WahedInvest does give me a higher allocation into the US stock market, about 65%. So that's all I have for WahedInvest. For those of you who would like a detailed comparison about WahedInvest versus StashAway and my opinions on it, comment down in the sections below and I'll try to make this video. And then for those of you who are new, subscribe, like, and comment on this channel. Let me know what you would like to see next. Love talking about investment, love talking about finance, although I'm not from a financial background. I'm just an engineer and with an engineering background. I'm trying to invest to grow my wealth. So thanks guys for staying all the way to the end of the video. Thank you for your time and I'll see you in the next video. Bye.